From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming August 20th session. And in front of you is a pair that I very rarely talk about. It is the New Zealand dollar Swiss franc pair. And what I find interesting and what I find this pair most useful for most of the time is a simple measure of risk. On one hand, you have the Kiwi dollar, which most of you know, maybe some of you don't, newer traders may not know this, is very commodity driven. So when the attitude is positive out there as far as risk, it does well. On the other hand, you have the Swiss franc, which is a safety currency, and it tends to do better in times of negativity or concern or fear in the market. So a lot of times I'll use this pair as a barometer of what's going on. And as you can see, we have seen a sharp sell-off in May, and we've kind of bounced around. It's been a bit erratic, but during the session on Monday, we saw the 0.75 handle cause enough resistance that we formed an outside candle, and it looks like we're going to continue this consolidation. So using that, there's a couple different things that you can come up with. You can use that to gauge a lot of other markets as far as the way risk is going to go. So, for example, if oil is doing well, generally that's considered a risky commodity. This pair typically does well. There's absolutely no correlation between the two currencies, but it or the two currencies involved in oil, but it does just show the general attitude. Now, the markets right now are focusing more on the Federal Reserve and whether or not they are going to taper off of quantitative easing. If they do, I believe that this pair will fall, and the reason for that is it should put an absolute shellacking on the commodity markets. And of course, the NZD is very commodity driven. The Swiss franc is a safety trade, so that probably should be good as well. On a break of the lows from the Monday session, that's this candle, we just flipped over into Tuesday, I'm more than willing to sell this pair as it continues this move down to about 0.7150. You don't necessarily have to aim for all of that, but I think we've got a nice little range here, and it does look like we're setting up for a pretty simple trade to the downside. As far as the upside is concerned, I'm not comfortable doing that with so many headline risks out there right now.